Gold is the money of kings, but silver is the money of gentlemen. That is the old saying, isn't it? But if you look at the last 125 years, you might come to a different conclusion. Silver isn't just the money of gentlemen. It is the most volatile, chaotic, frustrating, and exciting asset on the face of the planet. It is the devil's metal. It creates dynasties and it destroys fortunes in the blink of an eye. You're here because you want to know the history, the real history of how this white metal moved from the pockets of common men to the vaults of billionaires, and how the price has swung more violently than a ship in a hurricane. We are going to walk through every single major boom and bust from the year 1900 all the way to where we stand today in 2025. Buckle up, because this is not a straight line. Let's rewind the clock. The year is 1900. The world is a very different place. You could walk into a shop and slap a coin on the counter, and that coin contained actual purchasing power. It was physical silver. At the turn of the century, the price of silver was hovering around 60 cents an ounce. It sounds cheap to us now, but remember, a day's wage for a laborer was often barely more than that. The early 1900s were defined by a battle between gold and silver standards, but for the average person in the US and the UK, silver was the currency of daily life. For the first decade, from 1900 to 1910, prices were remarkably stable, drifting between 50 and 60 cents. There was no Federal Reserve yet in America, and inflation wasn't the monster we know today. Then came the First World War in 1914. War is hungry. War consumes resources. And war destroys currencies. As the great powers of Europe began printing paper money to fund the trenches, faith in paper dissolved. People hoarded metal. By the end of the war, in 1918 and into 1919, silver prices began to wake up. They shot up past $1 an ounce, peaking near $1.30 in 1919. That was a massive move for the time. It was the first sign in the 20th century that when the world catches on fire, silver catches a bid. But gravity is a cruel mistress. The roaring 20s brought a booming stock market and a sense of endless optimism, and silver began a long, slow slide. It drifted down through the 1920s, back below 70 cents, and then the floor fell out. The Great Depression hit in 1929. Everything crashed. Real estate, stocks, wages, and commodities. Silver was not spared. In fact, silver was decimated. By 1932, the price of silver hit an all-time low of 25 cents an ounce. Imagine that. A quarter for an ounce of silver. Mines closed. The metal was essentially unwanted. It was the darkest period for the metal in modern history. However, the 1930s also brought the Silver Purchase Act in the U.S. The government stepped in to buy silver to back currency, creating artificial demand. This slowly, painfully, dragged the price off the floor, stabilizing at around 40 to 50 cents, leading into World War II. Now, World War II changed the dynamic of silver forever. It wasn't just money anymore, it became a strategic industrial metal. It was used in photography, for reconnaissance, in engines, and electronics. The demand was massive, but the governments strictly controlled the price. Throughout the 1940s and 1950s, silver was locked in a cage. It sat quietly between 70 to 90 cents. It was the boring era. But under the surface, pressure was building. The world was rebuilding. The middle class in America and Europe was buying refrigerators, cars, and cameras. Industry needed silver, and there wasn't enough of it being mined at those low fixed prices. By the early 1960s, the dam began to crack. The U.S. government could no longer suppress the price at 91 cents while demand skyrocketed. In 1963, the price broke $1, then $1.29. This was the tipping point. The silver in the U.S. coins was becoming worth more than the face value of the coins themselves. It was Gresham's law in action. Bad money drives out good. People started hoarding quarters and dimes. In 1965, President Lyndon Johnson famously removed silver from U.S. coinage, telling the public not to hoard coins. Of course, they hoarded them anyway. By 1968, the price had surged to over $2 an ounce. The monetary link was broken, and silver was now a free-floating commodity. The 1970s. If you ask any silver bug about the glory days, they will talk about the 1970s. This was the decade of inflation, oil shocks, and the loss of faith in the U.S. dollar. In 1971, Nixon closed the gold window, ending the Bretton Woods system. The dollar was now fully fiat, backed by nothing. Gold and silver began a historic run. Silver started the decade around $1.60. By 1974, it had quadrupled to over $6, but that was just the appetizer. Enter the Hunt brothers. Nelson and William Hunt, Texas oil tycoons, believed the dollar was doomed. They decided to protect their wealth by buying silver. A lot of silver. They didn't just buy futures contracts, they took physical delivery. They flew planes full of silver bars to Switzerland. They teamed up with Saudi partners. By 1979, the price was climbing past $10, then $20. The world went into a frenzy. People were melting down their grandmother's tea sets and their wedding rings. The line to sell silver at the local shop wrapped around the block. In January 1980, silver hit its legendary peak. Depending on which exchange you look at, it touched $49.45 an ounce, from $1.60 a decade earlier to nearly $50. It was the greatest transfer of wealth in the commodity markets of the century. But the powers that be could not let this stand. The exchanges changed the rules overnight, raising margin requirements, forcing the Hunt brothers to liquidate. The crash was even faster than the rise. By March of 1980, just 2 months later, silver had collapsed to $10. The bubble had burst. It was a bloodbath. The next 20 years, from 1980 to 2000, are often called the Great Bear Market. It was a graveyard for silver investors. The price ground lower and lower. It spent most of the 1980s bouncing between $5 and $8. The 1990s were even worse. The economy was booming, the dot-com bubble was inflating, and nobody cared about a dusty old metal. Central banks were selling their stockpiles. Photography, which was the biggest user of silver, started facing the threat of digital cameras. By the early 1990s, silver dipped below $4 an ounce. If you bought at the top in 1980, you had lost 90% of your wealth. It was a lesson in humility. But smart money buys when there is blood in the streets, or in this case, boredom in the markets. In the late 1990s, the legendary Warren Buffett quietly bought 130 million ounces of silver. He saw that the world was running a deficit. We were using more silver than we were mining. He bought in around $4 or $5. When the Oracle of Omaha buys, you pay attention. The year 2000 marked the turn of the millennium and the start of the commodities supercycle. The dot-com bubble burst, and investors remembered that tangible assets hold value. Silver started the 2000s around $5. It was a slow creep at first. By 2004, it broke $7. By 2006, it hit $15. The launch of the silver ETF, ticker symbol SLV, made it easy for the average guy to buy silver without needing a safe in his basement. Demand surged. Then came 2008, the global financial crisis. As the banking system imploded, everything was sold off to raise cash. Silver, despite being a safe haven, initially crashed from $20 down to $9 in a matter of months. It was a liquidity crisis. But then, the Federal Reserve turned on the money printers. Quantitative easing. Trillions of dollars flooded the system. Investors, terrified of hyperinflation, ran to precious metals. From 2009 to 2011, silver went vertical. It was the 1970s all over again. It moved from $10 to $20, then $30. The internet fueled the fire. YouTube channels and blogs screamed that the dollar was dead. In April 2011, silver made a run at its old 1980 high. It touched $49 an ounce. It was a double top, 30 years apart. But just like 1980, it couldn't hold. Margins were raised, sentiment turned, and the price plummeted. By the end of 2011, it was back in the 20s. The period from 2011 to 2019 was a slow, painful bleed. It was a war of attrition. The fear of inflation didn't materialize, at least not in the way people expected. The stock market went on a historic bull run and money flowed out of metals and into Amazon and Apple. Silver drifted lower, year after year. By 2015, it was under $14. It stayed in this depressed range between $14 and $18 for years. It was the crypto era, and Bitcoin was stealing silver's thunder as the new anti-fiat asset. Then, 2020 changed everything. The COVID-19 pandemic. In March 2020, as the world locked down, markets panic sold. Silver crashed violently to under $12 an ounce. It was a flash crash. But it was the buying opportunity of a lifetime. Governments unleashed stimulus on a scale never seen in human history. Checks were mailed to every household. Supply chains broke, silver V-shaped. It rocketed from $12 in March to nearly $30 by August 2020. This momentum carried into 2021 with the silver squeeze. Inspired by the GameStop saga, retail traders on Reddit tried to corner the silver market. They bought physical bars and coins, clearing out dealer inventories across the US and UK. They pushed the price to $30 briefly, but the paper markets, the futures exchanges, absorbed the blow. The price didn't explode to $100 as they hoped, but it established a new floor. For the next few years, 2022 and 2023, silver was locked in a battle. On one side, rising interest rates from the Fed were bad for silver, pushing it down to the $18 range. On the other side, massive industrial demand was kicking in. Solar panels, electric vehicles, 5G towers, all of these require silver. It is the most conductive metal on Earth. You cannot have a green revolution without silver. This industrial demand put a floor under the price. This brings us to 2024 and 2025. The dynamic has shifted. We are seeing a decoupling. The deficits in silver production are becoming undeniable. For the last few years, the world has consumed hundreds of millions of ounces more than the miners can pull out of the ground. Above-ground stockpiles are draining. In 2024, we saw silver break out of its slumber, pushing firmly past the $30 resistance that had held it down for a decade. It started trading in the $32 to $34 range, fueled by geopolitical instability in the Middle East and Eastern Europe, and the realization that the U.S. debt spiral is mathematically impossible to fix without inflation. Now, as we stand in 2025, the landscape for silver is unique, and we aren't just looking at monetary demand, we are looking at strategic necessity. The price has established a new trading range, comfortably above $30, with spikes testing $40 again. The volatility is still there, it always will be, but the lows of the past, the $12 and $14 silver, seem like a distant memory. The gold to silver ratio, which measures how many ounces of silver it takes to buy an ounce of gold, has begun to tighten, favoring silver. So what have we learned from this 125-year roller coaster? We learned that silver sleeps for decades, frustrating everyone who holds it, only to wake up and sprint faster than any other asset. We saw it in 1919, we saw it in 1980, we saw it in 2011, and we are seeing the tremors of it again in the mid-2020s. From the 60-cent coins in your great-grandfather S pocket to the $40 industrial component in your solar panel, silver has survived every depression, every war, and every currency collapse. It is the cockroach of finance. It cannot be killed. It is volatile, yes. It is risky, absolutely. But history tells us one thing clearly. When the printing presses run hot and the world gets chaotic, silver eventually has its day in the sun. You have now seen the map of the past. You know where the landmines are. You know about the hunts, the crashes, and the squeezes. The chart of silver is a chart of human fear and greed. As we move deeper into 2025, keep your eyes on the industrial numbers and the debt clocks. The history of silver isn't over. In fact, many believe the most interesting chapter is just being written. Thanks for taking this journey through time. Stay sharp and keep your eye on the metal.